In this video, we'll be dealing with a very important provision, section 186. Section 186. As you all know, 186 is very important provision which is practically relevant and exam point of view is relevant. And this section 186 relates to what? Relates to intercorporate, right? Intercorporate loans, intercorporate security, intercorporate guarantee and intercorporate investment, LSGI. This section prima facie attracts when a company gives loan to another company, right? When gives loan to another company, that is for L. And when a company gives security for a loan, that is security. And when a company stands as a guarantor for a loan, or when a company invests in another company. How to invest in another company? Either in shares, equity shares, or in debentures. So, as you all know, section 186 deals with intercorporate loans, intercorporate security, intercorporate guarantee and intercorporate investment. Now, we will deal with the amendment which is introduced by Companies Amendment Act 2017. What are the amendments? The section says no company shall give an intercorporate loan, security, guarantee or investment in another company, body corporate or a person. So there is an amendment. The term person now does not include employee. So that is the very important exemption. The restriction is not to give any loan or the LSGI to any body corporate, to any company, and the section says a person. Companies Amendment Act 2017 has now exempted the term employee who is in the employment of the company from the term person. So that means hereafter section 196 will not be attracted when a company gives LSGI to its employee. So that is the first exemption, or we can say it is an amendment which is introduced in the Companies Amendment Act 2017. The second exemption is, you all know the framework of section 186, right? What is the framework of 186? There is a limit. For example, what the law says, when the LSGI, loan, security, guarantee or investment, there is a approval is divided into two parts. First part is what? Board approval with a unanimous board resolution. What is the limit? 60. You all know that 60% of what? Paid up capital, free resource and securities premium. Right here, you all know that 60% of, right, paid up capital, free resource and securities premium account, PUC, FR plus SPA, or 100% of FR plus SPA. So this is the condition. We all know that this is not an amendment. This is the basics of this section, right? 60% of paid up capital, free resource, securities premium account, or 100% of free resource or securities premium account, whichever is more. This is the cap. This is the limit. Up to this limit, you require unanimous board resolution, and above this limit, you require the approval of shareholders by way of a special resolution in general meeting. As such, SRGM. You all know that. Now, the exemption here is when a company gives a loan to its wholly owned subsidiary or its joint venture company above the limit, then you must understand that the approval of shareholders by way of a special resolution is not required. Always there, what is required? Board resolution by way of an unanimous resolution. So this is the second amendment. I'll repeat again. When a company gives LSGI, loan, security, guarantee, investment to its own wholly owned subsidiary company or its joint venture company, the above the limit condition, that is getting approval from shareholders by way of special resolution, is not applicable now. That is the second exception. But you must understand the third amendment is, even though you are giving loan to wholly owned subsidiary or joint venture, even though you does not require a approval from shareholders by way of a special resolution, but you should disclose that in the financial statement. So I will repeat again, amendment number 1, employee is exempted from the word person. 2, above the limit approval system is now not applicable when the loan is given by a company to its subsidiary, wholly owned subsidiary company or joint venture company. And third one is, even though you does not require the approval of shareholders, you should disclose that fact in the financial statements. Now coming to the last amendment, which is very important. That amendment is brought in the exemption. You all know section 186 does not applicable to a banking company, investment company, etc. etc. You have an exemption. Now there is an amendment in the investment company concept. The new amendment is investment company will be given exemption from attracting section 186 provided either of the two conditions is satisfied. One, the total assets. Take the total assets of the investment company. Right? What are the total assets of the investment company? You should take their investment. They can invest in three areas, you all know. Investment in shares, investment in debentures, investment in securities. This is an investment. What is an investment company? Acquisition of shares, debentures or other securities of a company. Exemption is already there for investment company. Now, through the amendment, they have given a clarification for what is an exemption company. What is an investment company? What is an investment company? Investment company is a company which acquires shares, debentures, securities. Yes, D, yes. Yes for shares, D for debenture, S for securities. They can invest. But the total asset, you should take the total asset, at least 50% of the total assets of an investment company should be from that investment. Or 50% of total income of that company should be from investment activity. So that is it. So now already you have an exemption for investment company under 186. The law through the Companies Amendment Act 2017 has given a clarification for what is an investment company. Investment company means a company which acquires shares, debentures or securities of another company. That's okay. For availing this exemption under 186, you should prove either the assets part or income part. What is the exemption? 100% out of 100% of total assets, 50% of the total assets of the investment company should be from the investment. Or out of 100% of the total income, 50% of the total income should be from the investment activity. So if either of the two criteria are attracted, then it will become an investment company for section 186. If so, section 186 will not be applicable for an investment company. So I will conclude this video by highlighting again what are the amendments in section 186. First amendment is the term person does not include employee. 2, above the limit if it goes, shareholders approval by way of a special session at a general meeting is not applicable if that loan is given to a wholly owned subsidiary of the company or a joint venture company, but you have to disclose that in the financial statement. Last one, the exemption. We already have an exemption 186. But the Companies Amendment Act 2017 has given a clarification for an investment company, which I had explained earlier. You should understand this 50% or 50% of total income or total asset criteria. So this is a very important section for exam point of view. You all know intercorporate loans, investments, giving security and giving guarantee.